Welcome to Market Brief After Hours. What a day we've had on Wall Street. We are looking at some truly historic milestones today, driven by a massive surge in risk appetite across the board. Let's get right into the numbers and the geopolitical shifts driving them. To start, the major U.S. indices absolutely tore through previous ceilings. What are the final figures looking like for the big three?
The numbers are staggering. The S&P 500 closed above the 7,100 mark for the very first time in its history. It rose 1.2% to finish at 7,126. Over the week, that benchmark gained a solid 4.5%. Then you have the Dow Jones Industrial Average, which jumped 869 points, a 1.79% increase, to close at 49,447. That capped off a 3.2% weekly gain. But the real showstopper is the Nasdaq Composite. It advanced 1.52% to 24,468, marking its 13th consecutive winning session. We haven't seen a positive streak like that for the Nasdaq since 1992, and it posted a massive 6.8% weekly gain. It is also worth noting that the Russell 2000 reached a fresh high as well, climbing more than 2%.
Those are massive moves, especially that historic run for the tech-heavy Nasdaq. The primary catalyst here seems to be the news out of the Middle East, specifically regarding the Strait of Hormuz. Markets are clearly pricing in a lot of optimism. Is that level of confidence justified?
The optimism is definitely the engine behind today's rally, but we need to pump the brakes just a bit. The sharp upward move reflects relief that Iran declared the Strait of Hormuz open during this ceasefire period. Investors aggressively rotated back into cyclical sectors, airlines, cruise operators, industrials, and consumer names, because the fear of a massive, prolonged energy supply shock suddenly faded. However, no one should be getting too excited just yet. We really do not know what will happen over the next few days. The access through the strait appears to be highly conditional. There could be restrictions placed on certain vessels, and the risk of a renewed closure is still very much on the table if tensions flare up again. ING estimates that around 13 million barrels per day of supply has been disrupted. So what we are seeing in the markets is a reaction to improved sentiment, not a fully resolved situation.
That is a crucial distinction: sentiment versus actual resolution. Let's look at how the rest of the world reacted to this. How did Europe fare?
European equities posted a very strong rebound. The Stoxx 600 rose 1.6%, with almost all major bourses and sectors finishing higher. Travel and airline stocks led the charge, which makes perfect sense given the easing oil fears. EasyJet was up 6.1%, Wizz Air surged 7.6%, IAG rose 6.2%, TUI advanced 5.4%, and Lufthansa closed 5.6% higher after reversing some earlier losses. Looking at the specific countries, Germany's DAX jumped over 2%, hitting its highest level since late February. France's CAC 40 gained 1.94%, Italy's FTSE MIB rose 1.75%, Switzerland's SMI added 1.92%, and the UK's FTSE 100 climbed 0.67%. We also had some interesting macro data out of Europe. The Eurozone's current account surplus narrowed to 25 billion euros from 40 billion. Plus, Italy reported a trade surplus of nearly 4.95 billion euros, even though exports and imports both saw slight year-on-year declines.
And what about the Asian markets? Given they closed earlier, did they catch any of this global optimism?
Not exactly. Asia-Pacific markets were mostly lower, reflecting a much more cautious response to those same geopolitical developments. Japan's Nikkei 225 fell 1.75% to 58,476, and the Topix declined 1.41% following profit-taking after recent record highs. South Korea's Kospi slipped 0.55%, though the Kosdaq managed a 0.61% gain. Hong Kong's Hang Seng dropped 1.01%, and China's CSI 300 edged lower by 0.17%. Australia's ASX 200 was marginally weaker, while in India, the Sensex and Nifty 50 both declined slightly. We also saw Malaysia's economy grow 5.3% in the first quarter, which is a slowdown from 6.3%. Over in New Zealand, the top index fell 1.2%, though food inflation there eased to 3.4%. But there were still pockets of strong activity. For instance, in Hong Kong, many core tech surged on its debut, opening compared to an offer price of 7.62.
We are going to take a quick break. But when we come back, we will dive into the massive plunge in oil prices, the huge day for crypto, and a detailed breakdown of the Forex markets, including those key moving averages. Stay with us. Welcome back to Market Brief After Hours. Before the break, we touched on the easing fears of an energy shock. Let's look at the actual commodity prices. Oil took a significant hit today as those supply disruption fears eased.
It was a very sharp drop. U.S. crude oil futures for May delivery fell 10.49%, down to $84.76 per barrel. Brent crude declined 8.70% to $90.69. Again, this is directly tied to the Strait of Hormuz news. Lower oil prices also helped push U.S. Treasury yields down as investors reduced their inflation risk premiums. The 10-year yield fell more than 6 basis points to 4.244%. The 2-year dropped to 3.70%, and the 30-year eased to 4.882%. This drop in yields was also supported by Federal Reserve Governor Christopher Waller, who indicated that current conditions could support holding interest rates steady.
While oil was plunging, digital assets were doing the exact opposite. Bitcoin had a wild session, pulling the rest of the crypto market up with it.
Absolutely. The crypto rally accelerated dramatically. Bitcoin rose 2.8% to break the $77,000 mark, specifically hitting $77,353, and it even briefly pushed towards $78,000. Ethereum also gained 3.2% to reach $2,430. The broader CoinDesk Market Index rose 2.3%. We saw XRP up 1.8%, BNB rising 0.8%, Dogecoin gaining 0.7%, and Cardano advancing 0.6%. Solana was the slight outlier, slipping 0.7%. What is really interesting here is the trading volume and the liquidations. Bitcoin volume jumped nearly 29% to over $54.3 billion. This massive surge triggered a wave of short covering. Total liquidations reached $816 million, with short positions making up $653 million of that. Bitcoin alone accounted for nearly $390 million of forced liquidations, which really amplified the upward move.
Let's pivot to the foreign exchange markets and look at the technicals. There was a lot of maneuvering today. Let's start with the euro to US dollar pair.
The Euro USD pair closed slightly down by 0.08% at 1.1770. It traded between a high of 1.1849 and a low of 1.1767, forming a rejection candle near the 1.1850 area. This shows that upside momentum is fading a bit in the short term. However, the underlying structure is still constructive because it remains positioned above its key moving averages. The 50-day simple moving average is at 1.1672, the 100-day is at 1.1700, and the 200-day is at 1.1673. Immediate resistance is up at 1.1849, while support sits at 1.1767, followed by that moving average cluster around 1.1700.
What about the British pound?
GBP USD had a similar session, pulling back from its highs but keeping its uptrend intact. It closed down just 0.04% at 1.3521, with a session high of 1.3599 and a low of 1.3504. We saw a modest rejection near the 1.3600 level, highlighting continued supply in that region. But again, the price is firmly above the moving averages. The 50-day SMA is at 1.3425, the 100-day is at 1.3446, and the 200-day is at 1.3413. The broader structure shows a gradual recovery trend, though recent sessions point to consolidation. Resistance is clearly at 1.3599 and support is at 1.3504.
And the US dollar against the Japanese yen?
The USD JPY closed down 0.35% at 158.56, trading between 159.52 and 157.59. The session formed a lower wick, which suggests buyers stepped in near the 50-day SMA at 157.57. It is holding well above the 100-day SMA at 156.93 and the 200-day SMA at 153.42. The broader trend remains bullish, but it is currently consolidating in a defined range after the strong rally earlier this year. Resistance is at 159.52, with support anchored at 157.59.
Let's not forget precious metals. Gold and silver both saw some significant action today.
Gold advanced nicely, closing up 1.37% at $4,853. It pushed toward key resistance at the 50-day SMA, which sits at $4,894, but remains just below it. It is holding strong above the 100-day SMA at $4,699 and the 200-day SMA at $4,190. Buyers are definitely regaining control. Silver had an even stronger day, breaking higher with a 3.72% gain to close at $81.27. It produced a strong bullish move, breaking and holding above its 50-day SMA at $78.81. Its 100-day SMA is at $77.24, and the 200-day is way down at $60.26. Resistance for silver is now at $83.05, with support shifting higher to $78.81. To wrap things up, let's look at some individual market movers. We already mentioned the crypto surge, and that obviously spilled over into crypto-linked equities.
It certainly did. MicroStrategy jumped more than 11%, leading the Nasdaq 100 gainers. Riot Platforms rose over 7%, and Galaxy Digital advanced more than 6%, reflecting a very strong correlation with the broader digital asset rally. Outside of crypto, a massive standout was critical metals. That stock skyrocketed 35% after the Greenland government approved an increase in the company's ownership of the Tanbreeze rare earth mine to 92.5%.
On the flip side, there were some notable casualties today, particularly in the tech and industrial spaces.
Yes, Netflix took a heavy hit. Shares slid more than 9% after the streaming giant issued a second-quarter revenue outlook that fell short of analyst expectations. And in the industrial sector, Badger Meter tumbled 24%. The water machinery manufacturer really disappointed Wall Street with its first-quarter earnings and revenue results.
It really highlights how unforgiving the market can be when expectations are this elevated, especially as we look ahead to more corporate earnings. The margin for disappointment is incredibly narrow right now.
That is exactly the takeaway. Equities have pushed decisively into record territory, and financial conditions look favorable right now, with lower yields and cheaper oil. But if those geopolitical tensions resurface, or if forward guidance from these companies starts to weaken, this rally could face some serious headwinds.
A perfect summary of a complex and historic trading day. If you found this useful, please follow Market Brief After Hours.